Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about HUISHANG Bank Corporation Limited Annual Report. HUISHANG Bank Corporation Limited offers a wide range of commercial banking products and services to both corporate and retail customers. For corporate clients, the bank provides current accounts, deposits, overdrafts, loans, trade-related products, foreign currency services, and wealth management products. It also caters to government authorities and financial institutions with similar services. In addition to these offerings, HUISHANG Bank Corporation Limited provides various services to its retail customers, including savings deposits, personal loans and advances, credit and debit cards, payments and settlements, wealth management products and funds, and insurance agency services. The bank's online and mobile banking services allow customers to manage their accounts and conduct transactions conveniently. The company also engages in securities investment, money market, and repurchase transactions. Furthermore, it provides renminbi and foreign currency deposits, clearing and settlement services, asset custody and management, finance leasing services, and other specialized financial products and services through its four main business segments: corporate banking business, retail banking business, treasury, and others. The income statement shows that the company revenue have been declining annually and operating income have not been increasing. This shows that the business is under pressure with rising cost and its management is unable to expand the business. The net income of the bank experienced a mixed trend, with varying increases across different years. The net income increased by 6.34% from RMB 15,917 million to RMB 16,926 million, while it also saw an increase of 8% from RMB 15,916,968 to RMB 16,926,496. However, the net income attributable to shareholders of the bank rose by a lower margin of 7.21%. The basic earnings per ordinary share increased by 8.57%. On the other hand, profit margins showed a decline in several key areas. The return on average total assets, ROA, decreased by 0.05, while the return on average net assets, ROE, dropped by 0.35. Additionally, the net interest margin declined by 0.22. However, there was an increase in operating profit margin of 26.2% in 2025 compared to the previous year. The reasons behind these changes are unclear from this report, leaving room for further analysis and investigation into the factors contributing to these fluctuations. The company's financial performance has shown a significant improvement in its ability to generate cash from its core operations. One of the key indicators of this trend is the positive operating cash flow that it has been consistently generating. This achievement is a testament to the company's efficient management and effective implementation of strategies aimed at optimizing its operational efficiency. The generation of positive operating cash flow is a crucial milestone for any business, as it indicates that the company is able to cover its expenses and invest in growth initiatives without relying on external funding sources. This trend suggests that the company has a solid foundation for long-term sustainability and can continue to drive growth through prudent financial management. The company's debt level and interest expenses have undergone significant changes over the past year. According to the extracted summaries, the total debt, liabilities, increased from RMB 1,788.5 billion to RMB 1,988.2 billion, representing a growth of 11%. However, this increase is not consistent across all sources, as some pages indicate a decrease in total liabilities by RMB 73,046 million. In terms of interest expenses, the company has experienced mixed results. On one hand, interest expenses on bonds issued increased by 28.96% to RMB 6,627 million, while borrowings from central banks saw an increase of 24.6%. However, deposits and placements from banks and other financial institutions resulted in a decrease of 37.3%. Furthermore, external interest expense decreased by 35.6%, contradicting the initial statement that interest expenses increased significantly. Overall, it appears that the company's debt level has increased, but with some inconsistencies across different sources. Interest expenses have also seen mixed results, with both increases and decreases reported in various sections of the summaries. The performance of various regions and segments in the extracted summaries reveals a mixed picture. On the positive side, Anhui Province stood out for its impressive growth in key sectors such as manufacturing industry, strategic emerging industries, and sci-tech enterprises. The province also saw significant increases in loans to private enterprises, agriculture-related businesses, and green finance initiatives. In contrast, Jiangsu Province's performance is unclear, but it did experience a notable increase in liabilities from 2024 to 2025. Similarly, Anhui Province's liabilities increased by RMB 38,008 during the same period, indicating some challenges in managing debt levels. Meanwhile, Jiangsu's liabilities rose by RMB 10,977, highlighting concerns about financial stability. Some segments showed mixed performance, with corporate banking business and retail banking business experiencing slight increases in market share from 2024 to 2025. However, treasury operations saw a decline in market share during the same period. Unfortunately, there is limited information available on other key segments such as corporate banking, personal banking, and others. Management is optimistic about the company's outlook, emphasizing the need to deepen customer group operations, reduce costs, improve quality, and increase efficiency. They aim to tackle challenges through reform and innovation with greater efforts, while also rewarding shareholders, benefiting employees, and contributing to society. The company plans to stimulate domestic demand by focusing on core scenarios such as livelihood consumption, smart travel, and cultural tourism ecology. This includes boosting consumption and improving people's livelihoods through credit card business. The internet-based loan business has achieved high-quality development through optimizing asset structure and strengthening risk control capabilities. Management is also committed to maintaining an appropriate balance between risk and return to minimize financial performance impact. They have implemented an effective internal audit system to promote sound development and value enhancement, and will continue to expand the breadth and depth of audits to reveal risks and hidden dangers. The company's capital management approach protects against business risks and meets regulatory requirements. Management will adjust the capital structure in response to changes in the economic environment and risk characteristics. Overall, the company is focused on delivering outstanding performance while safeguarding its legitimate rights and interests. That concludes the financial summary for HUISHANG Bank Corporation Limited. Feel free to comment below, and I will be happy to answer them when possible.